Level 1, $0 to $1,000. You walk into the bank with $340 in your account. You don't stride in. You sort of drift in, quietly, hoping nobody notices you're there. The teller doesn't look up, not because she's rude, because there's nothing in the system that tells her to look up for you. You're asking about a basic checking account. She hands you a pamphlet, points at the counter where the pens are chained to the desk. Chained. Like even the pens here know something about trust. The account has a $12 monthly maintenance fee. You do the math fast. That's $144 a year on $340. You ask if there's a way to waive it. She says maintain a $500 minimum balance. You nod, you leave, you never open the account. You use prepaid cards, cash, Venmo with a balance you reload every few days. Your financial life exists in workarounds because the system built for people with money doesn't have a door that fits your size. You overdraft by $6 at a gas station. The penalty is $35. You don't call to dispute it. You already know what they'll say. You already know how that call ends. At 0 to 1,000, the bank doesn't see a customer. It sees a liability, and it prices you accordingly. The first rule: at this level, the bank isn't your financial institution. It's your first bill. Level 2, $1,000 to $10,000. You have a real checking account now, a debit card with your name on it, direct deposit set up from the job you've been at for 7 months. The bank sends you emails, not about you, about their products. A credit card with 24% APR, a personal loan at 18%, a savings account paying 0.01% interest. You do the math on that last one. $5,000 in savings at 0.01% for a full year earns you 50 cents. They take your $5,000, lend it to someone else at 7%, and hand you back 2/4 as a thank you. Nobody calls you. Nobody checks in. If something goes wrong with your account, you call them. You wait on hold. You press 1 for English, 2 for account services, 3 for something you don't need, 4 to hear these options again. Your emergency fund doesn't exist yet. You know it should. You've read the articles, 3 to 6 months of expenses. You're working on month 1, have been for a while. The branch manager walks past you in the lobby, doesn't stop, doesn't nod. You are scenery here, a transaction waiting to happen. The second rule: between 1,000 and 10,000, the bank holds your money and sells you debt. That's the whole relationship. Level 3, $10,000 to $100,000. Something small changes, not in the bank. In the way you carry yourself walking into it. You have savings now, real ones. Not a number you round up, a number you protect. And the bank can feel that. Not warmly, mechanically. Like a sensor that finally registered your weight. You qualify for a premium checking account. No monthly fee. Free cashier's checks. A slightly better debit card design. The kind of upgrade that costs the bank nothing and makes you feel chosen. A junior banker asks if you want to sit down. You sit. He talks about money market accounts, certificates of deposit, maybe starting a Roth IRA. The products are fine. Not wrong, just generic. The same conversation he had with the person before you and will have with the person after. You're not a priority yet. You're a prospect. There's a difference. Prospects get pitches. Priorities get calls. You leave with a brochure and a business card. You put both in your car. The brochure ends up in a drawer. The card disappears. But something shifted. For the first time, the bank sat down with you. That's not nothing. It's just not everything yet. The third rule, 10,000 to 100,000 is when the bank starts watching you. Not caring, watching. Level 4, 100,000 to $500,000. Your phone rings. It's the bank, not the call center. A person with a name. Who knows yours? This is new. She's your personal banker. She noticed your balance crossed a threshold. She wants to talk about making your money work harder. She says that phrase, work harder, like money has a shift it's been missing. You get waived fees across the board, better interest rates on savings, access to investment products through the bank's brokerage arm. She recommends a mutual fund. You ask about the expense ratio. She pauses for half a second. That pause tells you something. You're important enough to call now, not important enough for complete transparency. The bank has decided you have something worth keeping, so they assign someone to keep it. The relationship feels personal, but the perks are real. The convenience is real. You stop dreading the bank. You start using it. The fourth rule: at 100,000 to 500,000, the bank gives you a person. What it doesn't give you is honesty about why. Level 5, 500,000 to $1 million. The lobby is different now. Not the same lobby, a different one. Priority banking, quieter, nicer chairs. No number you pull from a machine. Someone meets you at the door. You have a dedicated private banker. He doesn't wait for you to call. He calls you, not to sell you something, to check in, to tell you something changed in the market, to remind you about a rate adjustment before it hits. Your credit card has no preset spending limit. You book a flight. You book another one. Nobody flags it. Nobody calls to verify. Because at this level, the bank assumes your transactions are intentional. You get invited to an event, a dinner, a seminar, a conversation with their chief investment officer about where the market is heading. You sit at a table with 8 other people. Everyone is dressed like someone who stopped checking price tags. This is the bank showing you what loyalty looks like from their side. Not love, investment. You are worth cultivating. The fifth rule: 500,000 to 1 million is when service stops being a department and becomes a person with your number saved in his phone. Level 6, $1 million to $5 million. You don't go to the bank. The bank comes to you. Your relationship manager flies in from the regional office for a quarterly review. She brings her associate and a printed portfolio summary, and a full hour she blocked just for this. You offer coffee. She already knows how you take it. This is private banking, a different product line, a different floor in the building if you even go to the building. Different language. They say bespoke now. They say tailored. They say your goals, not our products. The conversation isn't about savings accounts anymore. It's about estate planning, tax efficiency, whether your trust structure makes sense given the new legislation, whether your portfolio allocation reflects your actual timeline, or just your tolerance for discomfort. The fees are baked in. Invisible. You pay for all of this through spreads and minimums and products that generate margin the bank never itemizes on a statement. You don't ask. They don't explain. The relationship depends on a certain kind of comfortable not knowing. But the access is real. The expertise is real. For the first time in your financial life, the bank is genuinely useful instead of just convenient. The sixth rule: at 1 million to 5 million, the bank stops being a vendor. It becomes something closer to a partner. A partner who makes more on the relationship than you do, but a partner. Level 7, $5 million to $20 million. The name on the door changes, not Chase, not Wells Fargo, Goldman Sachs Private Wealth, JPMorgan Private Bank, Citi Private Client. Institutions that don't have branches on street corners because their clients don't use street corners. You have a team now, not a banker. A team. One person manages the relationship. Another manages the investments. Another handles the tax strategy. Another talks to your attorney. They meet about you before they meet with you. Your portfolio has access to things that don't exist at lower levels. Private equity deals, pre-IPO allocations, hedge funds with $5 million minimums that turned away your neighbor last year. You get in because your assets make you useful to the fund. That's what access looks like at this level. Mutual usefulness among people with capital. You stop measuring your money in dollars. You measure it in multiples. Did the portfolio do 2x? Did this position return 3x? The language shifted and you shifted with it without noticing. The bank doesn't make money on your deposits anymore. It makes money on your complexity. The seventh rule: at 5 million to 20 million, you're not a client anymore. You're a relationship the bank reports to its board. Level 8, $20 million to $50 million. You don't have a banker. You have a family office, a team of people, some employed by institutions, some hired directly by you, whose entire professional existence is organized around one thing: your financial life. Estate attorneys, tax strategists, investment managers across multiple asset classes. Someone whose only job is to coordinate all the other people so nothing falls through the gap between departments. The bank pitches to you now. They send decks. They request meetings. They show up prepared. You decide whether to take the meeting. You walked into a bank once with $340 and couldn't make eye contact with the teller. Now institutions that manage trillions of dollars in assets, not because you changed how money works, because you changed what you represented to the people who hold it. The eighth rule. At 20 million to 50 million, you don't use the bank. You decide which bank gets to say it works with you. Somewhere right now, someone is standing at a register waiting for a card to clear, refreshing an app, stepping aside so the line can keep moving. They think the system is neutral. It isn't. It never was. The bank is a mirror, and what it shows you depends entirely on the number attached to your name. The money moves every 2 weeks. So does the treatment. Pay attention to both. And if this is the kind of content that makes you see the world a little differently, the subscribe button is right there. No pressure. But the next video goes even deeper, and you don't want to miss where this goes.